Good afternoon, everyone. This is Kristina Kuprina for an update on the economy. This one's titled Patience and Optimism. Why patience and optimism? Well, actually, when I originally selected this as a title, I wanted to more focus on the patience, but it seems that the optimism may take precedence to the patience right now, given a lot of the news that's come out economically. I'm fully aware of what's happening in the country and the world economically recently. But I wanted to spend a little of time of kind of setting the stage a bit. I will touch upon some topics that I brought up previously, just because there's more information and more knowledge there than there was previously. So far, things are tracking along fairly much in line with what I've been talking about since March, when we started doing these webinar series, as far as the recovery. It turns out, preliminary information we don't fully know yet, but given the usual triggers of the beginning and end of a recession, because the beginning and the end of a recession is not known until after the fact, right? Because traditionally it's 2 consecutive quarters of positive GDP. So what we go with was also traditionally certain things happen with unemployment numbers that really reference that. So if the numbers come out as planned, and we won't know again for another couple cycles, the lowest point was in April and the end was actually in mid-May. That was it. So not only was this the worst recession in US history by many multiples, it was also potentially the shortest. Again, we will take a little while longer, so I'll talk more about that in future webinars. But I wanted to say that at this point, based on unemployment and employment data, it appears to be the case. Now for a moment, I'm going to have to just put these on. Again, the 51-year-old life cycle thing, reading glasses, because I want to actually read the numbers to you that we're getting out. The news, unfortunately, often focuses on the most negative or the most shocking. I know, not a surprise to anyone at this point, but that is the case. So I want to a little bit break down the unemployment numbers, because there's some things that are unique about this cycle that wasn't here last time. And I'll talk about that in a moment. But first, let me get into the numbers here. The most recent, we expected that we were going to have 3.86 million to 21.05 million. Okay, as an astronomically high number, but it turned out that we had far less than that. Our unemployment numbers on this cycle have been far less than expected, but something that's, and far less, but in addition to that, the number of people going back to work already, again, this is May data, okay, the number of people going back to work really caught our attention, because in May, most areas were just beginning to open up. Now, this again, very quick in the cycle. Usually unemployment numbers stay high. There's 2 numbers, the number of unemployed and then continuing claims and then new claims. So the new claims are significantly lower than expected. Continuing claims are also dropping off as people are starting to return to work. Now, an interesting little fact, and many of you may already know this, is that part of the CARES Act that Congress passed has an enhanced unemployment benefits of about $600 a week. So because of those enhanced benefits, a significant number of people who are unemployed are actually making more money than were making when they were working. Just to give you a reference there, is 68% of the workers who are eligible for unemployment checks are getting benefits that exceed their lost earnings. So 68% of the people that are unemployed are getting more than their earnings. Okay, half those people are getting 34% more than what they were earning when they were employed. Now just let that sink in for a moment. In addition, those making less than $70,000 a year received the stimulus checks, $1,200 stimulus checks. So a lot of money is in a lot of people's pockets. By no means am I saying that this, there was no effect on anyone. People who are sole proprietors did not receive any stimulus, no PPP funds, no other stimulus and whatnot, unless they received some of this. Many people and many businesses are suffering. Tens of thousands of businesses will go bankrupt. Hundreds of businesses that are publicly traded are likely to suffer serious financial harm, be acquired, or go into bankruptcy. This is a reality. So by no means am I sugarcoating the situation that's going on right now, but I wanted to bring up the fact that there's a lot more money in people's pockets during the height of the worst recession in U.S. history than there is back before this happened. Not all, but many. Why does this matter? we have effectively right now, and our government is working on another round of stimulus. They'll start talking on next week. But even now, we have over $7 trillion of stimulus in the economy. The money, as I mentioned before, is being saved, and the M2 money supply, which is money saved on the balance sheets of corporations and individuals, is at record highs, the massive amounts of money. As things reopen, and as people will spend. Not all areas and not all ways. I'm going to talk a little bit about traveling in a moment and kind of what happened over the Memorial weekend. Why is this important? It explains a lot about the biggest question that I've been getting since probably the last month or so. Why is the stock market doing so well when everything in the world is so terrible? Well, first, the stock market looks towards the future. It looks ahead, and it sees the potential for growth. It sees the biggest things stopping the growth, which were the fear of a much worse outbreak of the virus and much more deaths and much more hospitalizations that actually ended up manifesting. In addition to the government shutdown, a lot of these concerns are beginning to go away. It's an interesting fact about the virus, and again, I'm not going to talk much about that at all, is I believe, and again, I should double check this number, of the people who, of the deaths of the virus, 52% of them outside of New York were in nursing homes or assisted living facilities. The entire nation, it was 42%. So that's a very important thing to keep in mind from the standpoint of now we know more of who is likely to get seriously ill and die and how to protect these people. And that is also where some of this is coming from. It's not as it was before when we thought even in California that we would have 28 million people in the hospitals. So that's part of the optimism there. It's not really that great of an optimism. It's just less bad than it could have been. And I'll give you maybe a bit of an analogy or kind of a vision of this. Imagine if you were a farmer and you lived in the Midwest somewhere, and all of a sudden, out of nowhere, a huge tornado came barreling towards your home, okay? Wind, rain, storm, the first thing that you do when you see this tornado approaching is you save your family, you save your livestock, you save your home, you do everything you can do. You get everybody in the storm cellar, you try to protect what you can, and then you jump in there as well. And while you're sitting under your home, waiting for the tornado to pass, you don't know what you're going to come back to. You don't know how bad it can be. You know how bad it can be because you've seen tornadoes before. You've heard of what it's done to your neighbors, but you don't know. And then tornado passes, and you come out of your home, open the storm cellar, take your family out, and there's that moment of great happiness when you see your family is all alive and your house is intact. And you hug one another and you shout and you celebrate because it could have been so much worse. And then after you're done jumping up and down, shouting for joy and hugging each other and thanking God or Source for, what you have still, and you look around and you see how bad the damage is. And you see that the power of the wind pushed a wall of mud blocking all the area around your home and the damaged fences that your livestock can escape from. Now the reality sets in that there's a lot of work to get us back to normal. And that's exactly what we are now. While the stock market has made a tremendous recovery, it's still well off the highs that it was before this happened. And it probably will take a while to get there. I'm talking about the entire market. There's obviously a lot of sectors and companies that are doing well, and some sectors and economies that will not do well for a while. And optimism is growing because people are excited just to see the stores opening again. Just to see some level of normalization in their lives, it's exciting. But just because the stores get to open, and just because we can do more than we could do a month ago, doesn't mean that we will. We have to feel safe to go there, and they have to be ready to care for us. And that's a process that will take time. As I gave the example of the shark attack before. Some people will jump in the water right away, some people take a while to jump in. There are still people that will wear a mask every time they set foot outside their door, even if not required. There are still people that will not set foot inside a store and have everything home delivered to them. And these people will be cautious for some time. They'll be cautious because they're at high risk, or they'll be cautious because they're afraid of exposing themselves to someone else. That will not go away entirely. I'll talk about travel. So using that, the example of that analogy, and when you have to clear that mud from around your house, every shovel load, as heavy and as hard work as it is, it's one step closer to normalcy. And that's what's going to happen. So the relief of it not being worse is beginning to go behind us. The excitement of seeing our favorite businesses open again and being able to do more than we could do just a week or so ago is there. But the reality of it is it's not normal, and it won't be for some time. And that's the slog, as I call it. The slog is the hard part. The slog is hard because anything sets us back. The stock market will drop, the fear will come back, things may be restricted or closed. If we get the second wave, if anything happens, it won't be as significant as the first wave, and I'll talk about that a bit later, as far economically speaking. But anything that sets us back, the fear comes back. The storm's going to return. But every step that we take to get back to normalcy, I say normalcy economically, I understand the other issues there. And why is it important? Because there was a lot going on that had nothing to do with COVID that was pretty dang bad. Okay? We're seeing some of it in the news right now, but I'm going to talk a little bit about things that I can reflect on definitely. In some parts of the country, in 4 weeks, they had a year's worth of suicides. Let that sink in. People being isolated, people being lonely, people not getting the care that they need. Now that people are starting to go back to doctor's offices again, they're finding higher incidence of people not getting preventive care in time and having bigger issues. Okay, these are all real things. Why you see this extra stripe in my hair is a diagnosis of someone that I know, not a client, but someone I know professionally who was diagnosed with breast cancer literally a week ago. Okay, she'll probably be fine. They caught it early, but this matters. This stuff really, really matters. The biggest hit, one of the biggest hits to our service sector outside of travel was actually hospitals. They were hit, 36% of their revenue disappeared nationwide during this time because people weren't going in or they couldn't go in because it was shut down. I talked a bit about that before. Elective surgery, preventative care, essentially shut down. And it'll make a big difference, and the consequence of that we won't see for a long time. Many of the other issues, again, and we're probably all well aware of now, but there's a lot of effects that happen with this shutdown. What I want to call maybe negative effects out with this shutdown that are just now fully being understood. And I would imagine that our leaders have seen this, and that's why we opened as quickly as we did. And remember, just a month ago, Gavin Newsom, our governor, was saying nothing would open until June. And a short time after that, he started letting counties open, or he had a program in place for counties to open and for business to open and whatnot. Why? They can see not only economic reality. California went from a big surplus, that rainy day fund, it's gone, it's long gone. And it's going to take a long time for California to crawl out of it because of the economic impacts. Why do the economic impacts matter? That's what pays for all of our social services, with the exception of donations and the nonprofits. That's what pays for all of our services and our support, our fire, our roads, everything else. We need that. The state needs that. And the reality of it is that there was a need to do these. Again, as a reminder, especially for new people, I'm speaking as an economist. I'm well aware of the social and the health aspects are greater than that, just outside of my area of expertise. So the slog, the long slog that we're going to be going through was why I say patience, patience, patience. In my world, I'm investing in areas that I expect will do well as these two things unfold. One is the new normal. Okay, economically, there's a lot of things that are changing, especially in the workplace, especially with how people are living their lives. There's this thing that nearly every single person that I have talked to over this country during this time of COVID has said some form of this to me. I mean, across the board, with almost no exceptions. That during these times, they were fundamentally reorganizing or reprioritizing their lives. They were thinking about things very differently. Some of it was because a lot of time with loved ones. Some of it was enough downtime to be able to think these things through. Some of it was new opportunities opening to them that wasn't available before. For example, being able to work remotely. My business clients across the board have said this to me, again, almost 100%. Unless they're in an industry where this is not possible, these words were said to me. I never knew my teams could be this productive working remotely. We should keep this up. Many of the business I'm talking to, as they're talking to me about advice on coming back, are wanting to give options to employees, again, where possible with the type of business that they have, to work remotely. How does this change where people live? How does this change how people organize their lives? Education, I won't get into that too much because that's kind of a scattershot with what a lot of the colleges and the schools K through 12 are talking about doing. Education, I imagine, is going to be significantly different in the future. How does that impact the cost of colleges? Right? It's going to be hard to charge a lot of money for something that can be done largely remotely, and you don't have to think of room and board and the rest of it. How does that affect K through 12? What are the options available there? Again, in the beginning, to protect the students and the teachers from a potential outbreak or getting ill. Beyond that, is there better ways of teaching? Again, outside of my expertise, but these things are happening, and they're happening in real time, and you can see it represented in the stock market. You can see the companies that were doing very well in this environment, but not just that. Another interesting market to look at is a real estate market. Can you imagine the fact that in April, on a national level, residential sales actually increased? Barely, tiny little bit, but actually increased on a national level. You couldn't even go inside the houses, right? Increased. I would imagine that we will see a significant movement in people's place of living going forward. I would imagine that's going to be based on, again, these are preliminary conversations, but it's not just me. There's a lot of data backing this up, because you may not need to live where you thought you needed to live to earn a living. And you're hearing this with the large tech companies, and you're hearing it with smaller companies. Does it still make sense to be in California? And I'm not picking on California. It's just a really expensive place to live. Okay, it's a beautiful place to live, but it's a very expensive place to live. Do I need to? And even if I want to remain in California, does my team need to remain in California? And this is changing. This is going to change real estate on a commercial and a residential levels significantly. And there's a lot of experts, some probably on this call, that know a lot more about the localized real estate than me, and they would be great ones to be able to talk more about this. I want to bring up a couple of other things because I had some questions that came up, and they came up from a lot of people, so I'm going to encapsulate them. But I'm going to touch upon a couple of other topics here, and then I'm going to go into the chat window to look at the questions that you send. So anyone on this call today, or this webinar, please ask questions, because I have tremendous amounts of data in front of me, and I really would like to make it relevant and interesting to the audience. This is also being recorded in 2 different methods right now. So this will be available to others. So you can obviously send this to them. So maybe questions you know that other people have that you may be sending this recording to, add them to the chat as well. I want to make this, again, relevant to the audience, because I'm going to get into a lot of other kind of details later, but I don't want to co-opt the questions that will come in, because they're usually pretty interesting. Another thing that I want to touch upon a little bit is the big question, because I think that this is one that's on enough people's mind I can address it now, which is, with everything going so badly in the country right now, okay, not just the virus, but obviously I want to call them protests. That's unfair to the protesters. So let's just separate this out for the purpose of this conversation. There's protesters, and then there's the rioting and the looting. So I don't want to disparage people doing a good thing for a good reason to people doing maybe not so good things for not so good reasons. So but the looting, the violence, and that's been going on in a lot of the communities, the rioting and whatnot, that's an issue that a lot of people think is why, again, the market's doing well when we have this across the country, we have such bad things happening. Also, the virus hasn't gone away. It's still with us. It didn't suddenly disappear in Memorial Day weekend. Why are things going well? I mentioned earlier, the markets are forward looking, but the other reason is that people are craving normalcy, and they're starting to spend and do things for that reason. The markets are futuristic looking. That's why. Is horrifying and terrifying and unpleasant as it is to see what's happening across our nation right now with these rioting and with these activities, they don't directly affect the economy, at least not yet. And I would say that the unemployment numbers I'm not saying they're not phenomenal, they're awful, they're totally awful, but they're less awful than expected is a lot of what's driving this up that we're seeing in the economy. So I don't want to confuse the social issues that are taking place in this nation right now, which there's no shortage of news and information on, with what's happening with the economy and the explanation as to why. But all things are not doing well. It's really interesting. I mentioned this in an earlier call. There's a huge split on what's doing well and what's not doing well. Okay, and then the other question here that came up that's really important is, what about the global markets? And you're right, I spent a lot of time talking about the U.S., and so the question is about the global markets. And so what's going on there? We are by far coming out of this better than any other nation to date, with the exception of possibly China and they're struggling quite a bit. And I'll talk about that a little bit in a moment. Europe didn't have a strong financial system to begin with, and they had a lot of things going on. The EU, Europe, right? And it cost a phenomenal amount of money to the point when bonds begin to be issued, I believe UK actually, at negative interest rates. You understand what that is? You're issuing a bond, you have to pay people to buy it. Okay, that's stunning. That's like crazy world stuff. It's economically possible, but it sounds insane. That's the need for the money. The money was there was just not the investors, but the countries of the EU had to do it. They're going to be struggling. They had enough headwinds against them with an aging population in relation to the younger, with very, very generous social programs and pensions and whatnot. They had a lot of headwinds. This is just more. It's going to take a while for a lot of the EU countries to come through this. Many other countries, I won't go by country, this is going to be a lot longer of a recovery for them. China, the government controls the means of everything, quasi-capitalism, socialism structure. However, they do control everything. So they actually their goal, I believe, was to come out of this first. Well, we had it first, we shut everything down, we're going to come out of it first, and we're going to take over the world while everyone else is shut down. Well, the problem is that all their customers were shut down. So even when they opened their factories and they got their distribution lines and everything ready to go, their customers are shut down. So their recovery has been slowed down significantly because of that. Also, everyone didn't jump right out and do stuff. There was a lot of caution. There still is a lot of caution there. More so even than we're seeing here in the United States to date, in our stage of the cycle. So that's a big difference. In the U.S., we can do something pretty amazing that no other developed country can do, or powerful economic country could do yet, which is print our own currency. And that was a big part of it. We were able to put the debt on the Federal Reserve, on their books, which is off the nation's books, in addition to the $2.2 trillion that we just kind of plunked on top of everything else. Those I will say for future webinars, because they're going to be, it's going to be very interesting how that plays out. Because don't forget, that's still a lot of money, and we still have to pay that back, the 2.2 at least, and the next round that's coming in a moment. The amendment here. So, okay, so send in your questions. I'm getting close to the time of answering questions, so send in your questions. I see them coming through. And I said, give me kind of the ideas of what you want to talk about and what's the most interesting and important thing, subject matter, because there's quite a bit of subject matter that we can cover. So send in your questions on the Q&A chat feature that you should see on your screen, and you'll be able to answer them. Okay, so the questions that were sent in advance, I'm going to get with those right now, which are here. Oh, the big one. So how does one analyze fixed income in this environment when you have no idea of what companies' earnings really are and what the effects of this really is, because you don't get the information until the next earnings report, which is quarterly for most companies, right? That's a really important question. For the purpose of people that are, because it's a little more technical, not aware, this fixed income is generally securities are issued as debt by companies. So they are able to use capital for other purposes. And so traditionally, when you buy a debt from a company, essentially, right, or they issue debt and you're buying it, what's the most important thing to you? It doesn't matter whether it's a municipality, okay, like a city, state, and whatnot, or if it's a company. The most important thing you want to know is, are they going to pay me back? That's number one. Are they going to remain solvent, and what's are they going to pay me back? Number two, what's the interest rate, the terms, and et cetera, et cetera. So normally how you evaluate the credit risk of the company is you basically go in and you look at their balance sheet and you look at the revenue coming in and you look at their expenses. So there's a lot to it, but you're kind of looking at that. What's their ability to service their debt even if they had a decline? And that's usually a pretty easy way of doing it. Again, a lot more to it. I don't want to get into a whole bond analysis class here. You look at that. But all of a sudden you're saying like the coronavirus, which you don't know, what's the impact on the company? We know how much cash they have on hand. We know how much access they have to credit, to be able to pay their debts and whatnot. But how is this really affecting them? All of a sudden, everything gets shut down. So you're going from this data that is completely inaccurate at this point because it's February data, right? Or even March data, and you're trying to extrapolate that going forward, okay? In addition to it is that you don't know which companies are going to get what from the government, right? So we'll use airlines for an example, and energy companies for example. You don't know who's going to get what from who. right? So that's a really important process, is how do you know that this company continue to maintain that? How do you know that this is stable to continue to own? And the best way of doing it is there's a lot of what I call microdata. Microdata stuff that's not the official economic data, but you can get an idea how people are doing things. And technology actually makes that really possible. Many of you online may have actually seen how they tracked people, saying how many people are still sheltering in place by movement. Okay, and they can do that because they don't have your name and all the detailed information, so you're still, I guess, anonymous. But you can track a tremendous amount of activity, even without it publicly being available, to give you probabilities in that. You can also look back at what is the company's ability to access credit from other sources to be able to pay their debts, to be able to maintain the business. How impacted are they likely from whatever government shutdowns are in place? Okay. With cities and states, it's a little trickier because you don't know a lot of where the revenues are coming from. It's a little bit more of a lag on that one. So municipal bonds were a little bit tougher to be able to do that, and you really had to go with what systems are in place to protect the states. Where else can they access resources? You've seen that with California. California got super creative. They always do. They got super creative on how they're managing their debt in this environment. It's likely in stimulus round 2 there will be money issued to help out states with COVID-related expenses and whatnot. And I think that's bipartisan enough it'll happen. And again, at this point, so that kind of makes it a little bit safer. But you really are looking at the analysis that you have on the ground. You can kind of even see that with companies of where the revenues are coming from and their ability to maintain and service their debt during this environment. In addition to that, you can also see what's kind of how their competitors are being affected as well. So that's another really big component to it. There's a lot that goes into it, and you're usually doing layers of it. So here's what we know the most, here's what we know the least, this is what we're purely speculating on, but we're going to watch it very, very closely. And that's what happens in the credit markets. The final thing you can say is that a lot of people have access to a lot of information, and you can see in the markets if people are getting nervous about something. The credit markets are actually much larger and weirdly more accurate than the stock markets in a lot of ways. They're not as emotional. So sometimes you can see things starting to get a little squirrely, and it's either an opportunity or it's a reason to be concerned. The process of doing this is why I don't own tons of individual bonds, is a lot of work and a lot of research. Sometimes I do it on my own, sometimes I hire other people to do the research and work, and it also depends again on the time horizon. Again, getting your money back is most important. The interest rates are second most important. And I'm trying to keep this very light and hopefully reasonably interesting to the entire audience. But if you want to know more about the specifics where I can actually show you how it's done, I'm more than happy to share that with you. Okay, let's see here. The other questions in advance, the second wave. Okay, if there's a second wave of COVID, of coronavirus, okay, if the first one's even ever ended, I'm not quite sure what constitutes a second wave. If it comes back in a big way, let's call it that, we will be more targeted in how we shut things down than we were the first time. The first time, we didn't know what we were dealing with. The information coming out of China was clearly not accurate. And just to give you a case in point, with the lack of accuracy of this information, there was just nothing. There was nothing really from the World Health Organization whatsoever. In fact, when it started breaking out, they weren't even sure it was transmissible, human to human. It was just, they didn't know. Nobody knew. We weren't getting the information, we didn't know. So when it hit our shores and started spreading as quickly as it did, we just clamped down. And I hold no fault to anyone. I can't say I would have done it any better. We didn't know what we were dealing with. Be cautious. Protect your population. Protect your citizens. So we took a sledgehammer to it because we didn't know. And in the absence of data, the best thing to do is be very cautious. And then all we had were models. And models, as I well know, because we use them all the time, are only as good as the input of data. And if the input of data is not correct and the assumptions aren't correct, the model's not correct. And we had models, and some of the models were telling catastrophic numbers. But we didn't know. So we used the sledgehammer and we shut it all down. And then we started to open it up bit by bit by bit. When I say we, collectively, the United States. Every state, every county in California made their own decisions, went their own way. And we saw that, well, yes, cases increased, partially because of testing, partially because, well, people are moving around. I can speak for Santa Cruz County. Santa Cruz County had pretty much no new cases for a long time, 140-something cases, 2 deaths. It was that way for a long time. And all of a sudden, over Mother's Day, some families all got together, multi-generation from out of state, in South County, and bam, we had another outbreak. People have a hard time sheltering in place for extended periods of time. So the spread of it will continue unless we really do force everybody to stay in one place. Giving that from the economics, that's what kind of where the economic days kind of come in saying, okay, well, it's going to keep happening whether we shut down or don't shut down. How bad can it get? So say there's a big second wave. Let's say it just outbreaks and it goes out there and a lot more people start dying. Next time around, I think that we will be using much more surgical tools. We'll be much more cautious. We will protect the most vulnerable. We will protect the people in these areas where people are held closely together, compacted environments, highly vulnerable populations, and let others, work and live somewhat normally. Protect people working differently than protecting individuals. Who knows? Again, that's up to the health experts, not me. I don't think it's going to be destructive to the economy. However, if and when things start closing down, we will see an effect on the stock market. As I said earlier, anything that comes that disrupts any of this is going to have an effect on the stock market. The other thing I want to add to that is individuals. Individuals should not worry about the stock market and not worry about the economy, not worry about the news, not worry about the government. Plan for your own situation. And it's a plan for your own situation because it's what I'm saying to you is very broad. It doesn't mean it's a good or a bad thing. How are you going to use the information for your own planning is key on that one. So don't use what I'm saying about my anticipation of it being a more targeted shutdown or containment the second time around than it was the first time around. Does not necessarily mean that everything's going to be hunky-dory. We have a lot of issues still ahead of us that we have to work through, which would be for future webinars. Okay, there's lots of questions here, so I'm going to go through and answer them. Again, keep sending them because I have the time. Do you know if the PPP timeframe has been extended to 16 weeks as opposed to the initial 8 weeks? This is implications how you can spend the money and how much can go for payroll versus other covered expenses. Also, do you know if there are covered expenses other than utilities? For example, is business insurance covered? The PPP, which is the payroll protection program, which is part of the initial stimulus that was put out, has been modified and changed a number of times due to the somewhat restrictive nature and the somewhat choppy rollout, for lack of a better term. I don't know what the final iteration of it is. I was helping a lot of people with it early in the process, but there hasn't been too many people interested in it at this point. I think it's very important to go to, the PPP is issued to SBA lenders, and they probably have phenomenal amounts of information specifically on their websites, as well as the SBA.gov itself may have more specific information. I do know that they were making changes to it to accommodate for, I think the original period was 8 weeks, but how payrolls, it was from when it was funded. So when you got the money, you had 8 weeks to spend it on payroll or the other expenses. But if it chopped in the middle of your pay period, that means you wouldn't be able to spend it in time to get the forgiveness component. I believe they've modified and updated and changed that. That's one thing I know. I think that they may have also expanded what it can be used for since early on. But I would strongly advise on this one to go directly to either to the lender that you are working with or whomever is working with, or go to the SBA website directly to look into that in more detail. Okay, next one here, more about real estate. With a caveat here that there are real estate experts that you definitely want to talk to. This one is about is this a good time to buy real estate? Again, I'm going to step back a little bit outside of expertise. This is something that's highly individual. It's highly individual. Okay, depends on your specific situation. If you have done this life reevaluation, or if you even before all this were kind of thinking about, I want to live in a specific area. I would like a larger house, a smaller house, closer to the kids, closer to the grandchildren, a lower tax state. It's always a time to consider it. It's always a time to consider it. It's less important, especially if you're selling something and buying something, or buying something you're going to live in. The price is not as important. Again, assuming, of course, that you can afford to buy it. It's not as much important. It's more, when do you need it and where is the best place to live? So if you're thinking, I want to move out of California. It's expensive to live here. I want to move to another state. Well, then there's a lot of work to be done in that. There's a lot of pros and cons to every state. So you want to do your own analysis and your own evaluation. What's most important to me? Why am I doing this move? What do I really want in this new state? What are important to me? And I'm going to give you a quick story, okay? This is actually a client of mine. So there's a client of mine that is very much loves the environment, nature, okay, like me. Loves it. Decided that it's because she, but it was they, decided that they were going to move to another state. They chose Nevada as their state, okay? They moved to Nevada. And it turns out Nevada has a little bit different idea about whether it's okay to shoot animals that come onto your property that are destructive than what they were comfortable with. And it was very, very distressing to them that their neighbor would be shooting things in their, because they have pretty big, where they live in the part of Nevada further out in the desert, they have pretty big, plots of land there. And it was really disturbing. Every time she's just, I can't believe they're murdering wildlife. And I thought, well, that's something you might want to know before you go there, because it's just a different environment. Every place is not like California. The weather can be different. The environment can be different. There can be many factors. So you want to understand that. So I always say to do the pyramid of life. You do this when you do financial planning. At the top of the pyramid is the most important things that you wish to accomplish. What do you wish to achieve, maintain, or eliminate from your life? That whole pyramid should respect. So what's this? And then kind of go down. So if it's a house, what's the most valuable thing that you can get from this location? What do you want from this? It doesn't have to be about the technicalities of it, because any good realtor is going to want to know this, especially if you're moving out of the area. And kind of go down. And when you find all those things, then you can see, is this in my price range, right? And then you can see if it's even available and on the market, and that's where, again, your experts will help you with. And then when it comes, you can make a decision on whether you want to sell a house, buy a house, or move to a house. And I know that's a little different maybe than someone else is saying it's all financial analysis. Now, how you're going to buy that house, that's financial analysis. That's our job to do. But really understand that, because it is something, I think there's going to be a lot of people moving. Based on what I'm hearing, there's going to be a lot of people moving. I would venture, and again, this is speculation on my half, this is not economic forecasting. I would venture to say that there's going to be more movement of people in the greater Bay Area than there has been at any time in recent history. I think that's an assumption of mine. This is not economic forecasting. I have nothing to base this off of except what I'm hearing is people are looking to live somewhere else. And I don't mean leaving California. I mean moving from this place to the coast or this place to here. Just moving, different house, different whatever. I think there's going to be a lot of moving. And I can't speak if this is nationwide or not. I think it's just definitely a time where you're going to see a lot of that type of activity. So to me, whether it's a good time to buy or not, it's highly, highly personal. And I would suggest, and I can't see who you are, so I would suggest if you are a client of mine, reach out to me. And I can talk about this in more detail. If you're not a client of mine, you can still reach out to me. I'll walk you through the planning stuff. But you're also going to want to, probably establish a relationship with an expert in real estate in the market that you want to be in. Just from the standpoint of sometimes things look a lot prettier on a picture than they might be really living there. And sorry, I have two separate windows open here, so I'm going to jump back and forth. One's the Zoom thing, and then one's another one here. So again, any questions, send them on over. Okay, so next question. This one, thanks for this question. Dangerous area to wander into right now, but I promise I'll answer every question, so I will. What about the riots and the impact on the economy and where people live? Okay, well, where people live, I don't know if something is theoretically short-term is what's going on right now is going to necessarily cause people to want to move that didn't already want to move. There's constantly things, people want to move because there's a new development near them. People want to move because of this and that. I don't know that would cause it, but I do think that there could potentially be future pressure on urban environments from the 1-2 punch of the virus and small living areas close together, combined with maybe concerns about things like this continuing to happen. Purely speaking economically here, I do not want to touch the social aspect of this. I know it's a highly charged subject. However, I think that there could be, outside of my area of expertise, economically, what you've seen by the markets, there's not really a big impact. In fact, just for fun here, I will show you, if I can do this screen share thing. like to see. This is a chart that some people find interesting. All right, so here we go. So if you can see the screen right now, this screen is the S&P 500. Okay, that's the best representation of the stock market. Each of these little bars here represent a day in this chart. Okay, red ones are negative days, green ones are positive days. There's a lot more information here. I'm not going to get into it, but just overall. So here you go. This was back here in October as far as the screen goes out. So market's kind of running up, everything going well. Why? I'll show you another screen in a moment. Then COVID dropped down, the low point back in March. And here's the recovery that's come up since then. That's where we are today. So we're still not back where we were, but you see the short period of time in which this happened. You went from this in late February to this in late March, and to this in, well, we'll just go back here to late May, right? That's a lot of movement in 2 months of time, okay? Sorry, 3 months of time. And let me show you something else here that you might find interesting, which is, just to putting this all in perspective, this is the same exact thing. This is the S&P 500, but these are monthly bars instead. This period of time here, that's the financial crisis. That's the lows back in 2009, okay, back here, early 2009. Here's the 10 years after that, all of this rides up. This is COVID, these 2 months here, and this is the recovery from COVID. So I'm hoping that this gives you a little bit of a perspective of how far we've come since the financial crisis. Even at the worst point, at the bottom of this bar, the worst point in the worst month in March, we actually were right where we were back in the end of 2018. That's just wanted to give a little perspective. Second thing I'll share with you is this chart. Sorry, this is off an email, because this is one that will answer pretty well why the economy's doing well in this environment. This is our current activity indicator, which is one of the many pieces of data that I use. It just basically shows you the current activity, and it's kind of a combination of consumer spending, housing, labor, manufacturing. It's just a great way to put a pulse on the economy on a monthly basis before we get the government's data. So here's how it was kind of going into, it's about a year. This is a year. Each bar is a month. This just 2 years worth of data. Okay, 2018, 2019, and then COVID hit. Okay, so you can see March, April, May. This is what's excited the economy. This was April. And you can see these are declines. So up here above that line, these are how much of our economy is coming from each sector. This is how much of our economy, detraction, negative, is coming from this sector. So that's the difference. Even before things were opening, that's the difference between March and May. So anyway, I just wanted to share that with you because I think these are great perspectives. So I'm going to shut that whole thing off. Okay, so more questions? Oh, I'm sorry, apparently, I will do this again. Can you see the screen? I just realized that some people could not see the screen, so I'm going to do this very quickly one more time. Apologize for that. Okay. Here we go. All right, so first one I will show you here. This is the economic activity indicator. Okay, this here is showing you, this is basically the growth. This is monthly data. This is the total activity of our economy. Okay, going along, goes up, it goes down. This is manufacturing, consumer, housing, and labor. This is the biggest drop, right, that we had. This was in April. This is a lot of why the markets are excited, because even when things were still relatively closed, we actually had an increase. A less bad decrease. I shouldn't call it an increase. but it wasn't as bad as April. So even when things were still relatively closed, as things started to open in May, there was a significant increase in the bad activity, so decrease in how bad the activity was. Okay, that's one. Number two, I'm going to go back very quickly because you all heard me say this already, and that is the two charts. This is the S&P 500. Each of these bars represent 1 day. Okay, red down, green up. This is pre-COVID. This is the decline largely in March, the end of February and March. This is the recovery since. So we're about 2/3 of the way back to where we were before the COVID hit, or at least it hit and the economy began to shut down. This is when the economy started shutting down. First travel, then the rest of it in this period of time. I go back over here. Again, I'll be quick because you already heard this. Here's the monthly. Same thing. Each of these bars represents a month. This low point here, this is the financial crisis. This is to give you perspective, this is the lows in 2008, 2009. This is the 10 years of recovery that we've had. This period of time here, that's COVID. These two bars here, okay? February and March. Just in perspective, the lowest point in March didn't break below where we were in late 2016. That's, even in that most severe moment, we were nowhere back. So many people thought we were right back where we were in 2008. Not even close. The lowest point at that lowest day didn't even cross where we were back in 16. So that just, again, I wanted to give that perspective, and here's the recovery since. And the reason for throwing this up there, and again, I apologize for goofing that up right there. The reason for doing this was sometimes the news is designed to keep us really, really, really scared. Okay? And so this is the worst this, the worst that, the great, it tends to be negative. And a lot of the negativity depends on what you watch. But overall, the news is tending more. And perspective is lacking oftentimes. So giving people that perspective is saying, yes, we had this really big drop, and it was the fastest drop we'd had in U.S. history, and it was the worst recession that we had in U.S. history. Also, may well be the shortest, but the worst. Or see, these are the things that keep people scared, and fear is what keeps you from enjoying your life. So I wanted to show these charts to you, and I have no shortage of more of them, but I find that they can maybe be a little boring and dry and just maybe only exciting for me, is to give perspective. And the perspective is kind of tying into some of the last questions that are here. So I'm going to hop over and ask these questions here and then close out with a little bit more information and whatnot, and things to kind of look for as you go into the next. I will mention that the next webinar in 2 weeks is going to be about the new technologies, innovations, and ideas that are coming across the board right now as we speak that are changing a lot in our lives. Will be changing a lot in our lives. Some of these things are kind of came to light because of the virus and because of the way that we're using technology differently. Other things are things that we wouldn't have considered before that we're considering now. And some are boring and somewhat uninteresting things, usually like the supply chain and whatnot, and where tremendous opportunities lie there. We'll not be giving specific investing advice, just talking about some really interesting things that are going on as we go forward and through this. So it's a little bit different. Okay. So, next question here. Let's get back the... Okay. So, other question I have here. And this one's a little bit more about kind of financial planning. It says, if I want to invest money, is it better to invest in things like gold or cryptocurrencies, or is it better to invest in real estate or stocks? You must be a newcomer to this from the standpoint that I can't specifically give investment advice. It's really important for you to invest in what it is that that's going to best fit your goals. There's not really the best. Every investment has a trade-off to risk to reward. Outside of completely fraudulent investments, they all have a trade-off. What's right for you depends on what you're trying to accomplish and what you're trying to achieve. There's lots of options. There's a lot of different things to do. Do the pyramid. Do the pyramid idea. You're not on this planet to make lots of money. I don't think anybody, that's their major goal, is just have a giant pile of money. Now, maybe for the purpose of having security and having opportunity and being able to do the things you want to do for yourself and others, there's a lot of noble reasons to have it, but it's not the total purpose. So do the pyramid. Find the purpose first, because the purpose is exactly why you want to invest. And if you can break it down from there, it's easier. And I'll help you out. I'll give you some ideas and pointers. If you don't have to hire me, I can give you a few minutes of your time just to kind of point you in a direction of doing that. Because it's sometimes we go backwards. And I think we go backwards a lot because we've been trained that you have to invest, you have to invest, you have to invest. You don't really have to invest. You might want to. It might be a really smart idea, but it's not a have to. There's a lot of ways to get there. And you want to see that. So what do you want to accomplish first, and then back that down? Now, there are going to be some times, especially when inflation comes up here, that investing is really going to be important because not investing may actually be dangerous. And I'll give you just a quick example of that. When inflation rises, your money in the bank loses purchasing power very quickly. And you have to understand what that will do to you. And many, many people probably listening to this call right now don't know what inflation really is. Because I was pretty young when it came around last time in the late 70s, early 80s, and I don't really remember it. I remember my parents talking about it, but it was that weird adult thing that I didn't really understand. So we haven't really experienced it for so long in our country that we're not really used to adapting to that. And that's going to be a time when cash in the bank is actually going to be something you're going to really want to think about differently. And that would be a time. But besides that, planning is the most important thing. Planning gives you a sense of confidence in a world that has a lot of, what's called insecurity and uncertainty right now. A sense of confidence only from the standpoint of you do the simple process of what we've all been doing right now, right? Reevaluating life. What do we want to see or do differently? And then just you adding some of the financial components to it. A real financial plan is not permanent. It's not a forever thing. It's something that you can look back at and modify and change as your situation modifies and change. I know that's happening to a lot of our clients right now. They want to talk about their plan because they want to understand if they can still do things the same way or if they should do things differently, or they want to do different things. There's a tremendous need for planning because planning helps you see what's possible, and then it's adjustable when changes happen. Planning is the key. And for us to feel that we have are reaching our highest purpose and our greatest aspirations of what we want to accomplish in our lives, they're building that foundation to see what's possible. And that's something that is very, very, very important. So the investment is just a piece of a tool that goes in a toolbox. It's not the entire project. And to do the project, you just want to make sure the tools are all correct that you have. And what you do today is not necessarily something that you're going to want to do tomorrow because life changes. Is your plan flexible enough to change with you? It's a less important what will do well investing than it is what will do well to get you and your family and your loved ones to their goal. And enjoy the process to get there. That's the key that just the numbers don't solve for. And that's a key that sometimes makes people not want to necessarily do planning of any nature and just kind of enjoy life as it comes. The planning says what's possible. I've spoken on this before, but I'm going to mention it here quickly because I've had a lot of questions about this as the word's gotten out. So I practice and preach what's called financial consciousness. And for those who haven't heard this, financial consciousness is defined as follows. Consciousness in its basic definition means awareness and understanding. So awareness and understanding of how your financial decisions and financial process within your life all fit together with the rest of your life. To understand that and not have things in isolation. Oh, I got that 401k over there, it's doing things. I have this over here, my taxes over here. Bring it together and give it a purpose, an intention. And that's the goal. And it makes everything easy because when you're making a decision about do I do A, B, or C, everything lines up with your actual plan itself. So I wanted to, again, touch upon that subject because I've gotten so many questions on it, but it comes back to so many of these questions that I'm getting here as well. And it looks like it may not be any more questions on this one. And on this one, there are two questions that are left. And it says, would you talk to I'm sorry, I'm reading it, talking at the same time. Would you talk to my company? They really need some advice and help as far as how they're going to go forward. Or sorry, put the reading glass on. Go forward. Okay. Yes, I will. There are a lot of companies doing what a lot of individuals are doing right now, which are deciding: do we still want to be in business? If we want to be in business, do we not want to do things the same way we used to be doing things? And if we don't want to be in business, what's the best options for us? Do we just close the door? Do we look to sell it? Do we hand it over to our employees? There's a lot of decisions being made by companies that weren't making these decisions before. So yes, I'll absolutely talk to you kind of sound like you work there and it's not your company. So, if they're open to talking to me, absolutely. I have said this before and I'll repeat it. I am in service. I will help as many people as I can. Provided my clients are cared for, I will help other people, at least get you in the right direction. So definitely tell them to reach out to me. And I know some people that really have a lot of expertise in this as well. So I'll make the connections properly. Okay, last question that comes across. It says, thank you for doing these webinars. I really appreciate them, and I watch them, and I share them with others. Well, thank you. My only question I have for you is, you talked before about infrastructure and changes coming with infrastructure. What are you seeing, and can you talk a bit more about that? Okay, I have a couple minutes left. Yes, infrastructure is something that this country desperately needs. We need not only to expand our infrastructure. A lot of it is not built to our rapidly growing population and our needs. And also the other thing with that is a lot of our infrastructure is aging and desperately needs to even just be replaced or repaired. We have all probably seen the roads where they sort of fill a pothole and then the pothole sort of sinks in, like it seems like a month later. There's a lot of patching and fixing things up, but our infrastructure really needs to be repaired. I think we can pretty much agree on that. It's also, rare word, I have to say it, bipartisan. Believe it or not, the Democrats and Republicans both think that infrastructure needs to be worked on. So if I was the president of the United States, or the leader, governor, whomever, I would do as follows. I would issue long debt. Why not 50-year debt? We already issued 30-year mortgages, but I would be issuing 50, maybe 100-year bonds. At these interest rates, our treasury is 10 years, 0.66%. This is like the cheapest it's ever going to be. Issue the bonds. The rest of the world's still buying them. Yes, it will add to our technical debt levels, but again, we have buyers. We can do this. And we can buy back other debt on our balance sheet as well and reissue at lower rates as it matures. So we can bring down our overall cost of this debt and use that money towards infrastructure. Why infrastructure? Again, bipartisan. Few people are going to say that's a bad idea. I mean, yes, some people will, but it's pretty universal. It puts people to work in jobs that pay better than many of the jobs lost in the service industry. Okay. So the 40% of the people that were unemployed in April were making less than $40,000 a year. Okay, that was largely the service industry shutting down. So what if we can find jobs that are better paying, learning skills, working towards building a greater nation, infrastructure-wise, at the same time as all of us, every citizen of this country and every visitor to this country gets to enjoy it. Our bridges, our roads, our train tracks, whatever it is. So it's just one of those things that's really can somewhat bring this country together for a universal goal of rebuilding the nation collectively together at the lowest interest rates we can possibly get. So sorry, I got on my soapbox a little bit there, and I know I'm not running for office anytime soon, but it's just an idea. Hopefully the people in power will hear this. But it is possible. It's a really big deal. It's something I'm very passionate about because we can get this done. And it would be good to be doing things that kind of bringing the nation together in a time when there's a lot of division, a lot of separation. The last thing I'm going to say in closing, because we're towards the end of the time, is the response I've gotten from people, a lot of these webinars, I've gotten a lot of response. So thank you. It's valuable to me to know how if I should be doing these and how I should be doing them. It's optimistic. It's optimistic, and everything seems so negative and pessimistic. Well, the news is just, that's the way the news is, and that's where people get most of their information. If not their news, from social media. There's not a lot of positivity, and if you're positive, that means you're not paying attention. But I think it's just a matter of what you focus on. Everything that you hear negative, it's probably real. It's just where you focus your attention. And what you focus your attention on is exactly what you manifest. If you see things negative, if you see the worst case, that is exactly what you manifest and bring into your life. If you see positivity, if you see optimism, that's what you bring into your life. The reality doesn't change. It's your life reality changes. So it doesn't mean that you're not paying attention if you don't see the negative, but focus on the positive. Because to date, that's how we've gotten ourselves out of some pretty sticky situations. So what I would say is, my best recommendation is that take everything you hear on the news with a grain of salt. It is not there to make you feel better about your life or the day. If you feel that you need data and information on anything economic or anything financial planning, reach out to me. I'm more than happy to share it with you. I have access to the information, and I can really customize it for what you're looking for. Feel free to share this with others. I've gotten responses from people all around the country, which is super cool because it means that this is useful and relevant. And I so greatly miss seeing you face to face. This is very hard for me not to actually have you in my office now for going on, what's it, the third month? And this is a way for me to feel that connection to you, in addition to our meetings that we have and our Zoom calls and our phone calls and whatnot. But I miss all of you very, very, very much. And I'm truly looking forward to the day that we can get together face to face. I am. And I just know that I'm here, know that I'm in service, and know that I'm going to help in any way I can for us to get through this time and the next time and the time after that. With that being said, I'm going to log off for now. Thank you all for coming today. All right. Bye for now.